Absolutely flat on the headline indices. Eicher Motors is a stock you just can't take your eye off on. It's now down about 3% odd. By the way, Infosys is entering the results season very, very strong. So really in pole position, almost 1% higher on Infi. Let's now put the spotlight on NMDC and this price cut that has been announced. Nigel was just telling us that, Nigel, this is what, the third time in a month?
That's right. This is the third time in the last 1 month that NMDC has cut prices. And effective today or yesterday, in fact, the price cut is around 350 rupees on lumps and around 300 rupees on fines. Now, in the last 1 month, they've cut prices thrice. So just totaling that, in the last 1 month, the price on lumps is down by 950 rupees, and on fines, it is nearly around 750 rupees. This is not good for NMDC because, as it is, the Donamalai mine in Karnataka, that's been shut down for the last couple of months. And in addition to that, so production is lower, and now pricing as well is going wrong. The key reasons for this price cut are that the private miners in Odisha, they cut prices in the last 1 week or so. So NMDC had to follow suit, otherwise, their dispatches will get impacted. And the other factor is that, a lot of miners, you have a particular amount that you can mine in a particular year. Now, next year, a lot of the non-captive mines, they will have to go for re-auction. So ahead of that, we are seeing increased output from all these private miners, increased supply in the market. That's what putting pressure on prices. And the second factor is that we are seeing a bit of a slowdown in global steel demand as well. So not good news coming in for NMDC.
Okay, just a second, Nigel. Wouldn't it be good news for steel guys?
But the steel guys will also be cutting their prices, Lata, in the next 1 week or so to keep, the price parity between imports as well as domestic prices. So not really a positive because steel price cuts as well are in the offing.
Okay, it's all lower on the commodity side, on the metal side, it seems. Thanks, Nigel, for putting that in perspective for us. Time now to move on to our next market conversation. Anand Shah, Deputy CEO and Head of Investments at BNP Paribas Mutual Fund, is now joining in. Anand, good morning. Season's greetings. And let's start off by wishing you a very happy New Year 2019. So, one is really wondering whether this year, beyond the volatility, will be a year of gains. Or do you think 2019 is going to be an extension of the previous year, which just means more consolidation?
Hi, very good morning, and wish you and all your viewers also a great 2019. I think this year will have sort of two phases. The first phase will get a lot of answers. Let me put it this way. It's the first half will have sort of a news flow heavy, both from a global macro as well as obviously the Indian general elections. Both will sort of give a lot of answers to us so that in the second half can be really productive in terms of doing stock picking, in terms of market finding its levels, and even from a business point of view, you'll get more clarity to commit capital and do capex. So to me personally, this is a year where it's basically two halves, where the first half will give us answers and second half is when we'll get the direction for the markets.
Okay, good morning, Anand. So are you trying to say that the markets will do better in the second half than the first half? We never know when the markets will do well. That's a difficult question. But what I'm saying is from a fundamental research point of view and from a clarity of investment point of view, we will have a heavy first half. We will have some clarity on which way the US Fed is moving. Frankly, last year has been quite a divergence between the monetary policies of US versus the rest of the world. Yeah. If we get some clarity, we'll get a, little dovish dollar in that sense, will be a great news for the emerging markets in general and India in particular. Similarly, crude. Crude had a massive moves. We will have the production cuts into first half. We'll see some clarity on crude, and obviously from India's perspective, obviously the elections will be also behind us and we'll get some clarity in terms of where we are headed for the next 5 years. So in that sense, I'm saying we will have a little difficulty in taking many calls or at least predicting a market. But the second half will be great here, irrespective of market goes up or down. We can actually do stock picking and make investment decisions. And that is what I'm saying. Okay, yeah. Actually, we just spoke to an economist, Chetan Ahia of Morgan Stanley, who believes that some answers could come even this week. The Fed chair, Powell, is speaking on 4th.
and on 6th, Williams is speaking, and maybe they will tell us something about the contraction of the balance sheet timetable. So people are expecting answers earlier. Anyway, we'll wait for that. How do you play the first half? One of the themes that we are getting to hear is that there will be a farm package. Obviously, the states, governments which have come to power recently have already announced something. The centre may announce something. Is that a theme you will play at all?
I think it's been an ongoing theme, and irrespective of the packages, I think we are seeing steps taken to improve the farm income. But just to continue on the point of how do we play, I think what is important from the equity market point of view and from the earnings point of view is that all the framework reforms that have been taken off in the last 4 years, be it GST, be it DBT, will continue to benefit the underlying earnings. The earnings are already sort of, while delayed, but it's sort of picking up. And that will continue to play out in the second half and even in the first half. From an investor point of view, I think we'll have to ride out this volatility. We'll have a lot of noise and lot of contradicting signals through the first half. We'll have to use these corrections, or we'll have to use a SIP route to continue to invest, and then post the elections is when we can commit a large capital or commit more money to the markets once we get the clarity.
So let's talk about the portfolio construct, Anand. I believe that you're still optimistic on consumer stocks. So despite the high valuations, would you still add them fresh now to the kitty?
I think consumer stocks have been beneficiary, as we've been talking about, of the consumption recovery generally from the demon and the GST shock, but also the enhanced, money flowing into the rural market, both through a higher MSPs, but also through infra spending. I think the signals we are getting from rural India is there's a massive investments on the infrastructure, very small projects, but that's also playing out and helping the overall farm income significantly, or the money flowing into the farm. So that's helping staples. We are seeing urban recovery helping discretionary. Overall, we continue to like that space from a long-term point of view as well as from a immediate point of view, given that we'll have more volatility, as we just spoke about the commodity prices been correcting, China slowdown. That all is sort of not impacting this segment. So we continue to like the consumer-facing businesses from the longer-term perspective for sure, but also from a near-term perspective.
Okay. What about banking? How will you play that? Banking and non-bank, I mean, the entire financial space. Is that also just retail, private, considering that you're playing consumption?
Right, and little bit additional point to that is, we also seeing some revival on the corporate banks, particularly the private sector corporate banks have a large retail liability franchise. They have a decent retail asset book also, but the pain point for those banks had been the corporate book and the NPAs related to that. So that also an opportunity over and above the retail banks and the retail NBFCs. I think very clearly we like the retail banking and the retail NBFC space. But we also looking at opportunities in the corporate banking, given we are seeing the peak of the NPA cycle, and we are seeing sort of, and that's what the report also came out from RBI yesterday, where we are seeing softening of the NPAs, and that will help the earnings growth rate. So our projection for the FY20 and FY21, which we see from Bloomberg and other analyst estimates, shows the maximum profit growth has been in the corporate banking side. So that's also a space which we have been sort of looking positively in the 2019.
So, Anand, if I ask you for your favorite theme, at least for the first half of 2019, what would it be?
I think we are sitting with, the portfolio as it is. We've been sort of underweight commodities, metals. We've been sort of neutral-ish on the IT and the global, basically, export stories, given there will be, if not anything else, some non-tariff barriers and other stuff. So we've been liking the domestic space, given the tailwinds we already have. So we're sort of not changing the portfolio much, while we are looking positively for this year now, even the infrastructure. So we've been sort of underweight on infrastructure all along. That also we'll have to see how individual companies are benefiting there. But otherwise, I think we're still sticking with the banking financial services, our largest overweight, followed by the consumer stories in India.
All right. Anand, it was a pleasure speaking with you. Thank you very much for ushering in the new year with some optimism. Yes, we will wait for all those answers. I hope they are pleasant ones in the first half of the year. Thank you for joining us. Well, we have to take a break. But we're coming back and analyzing what we've done a little bit in the past. The Reserve Bank allowing that one-time restructuring of medium and small enterprise loans that don't exceed 25 crore rupees. What is the impact on various institutions?